Gold and silver have shocked global markets. In late January 2026, precious metals surged to unprecedented record highs, raising a big question. Is this a safe haven rally or a warning sign for the global economy? Record-breaking price. Surge gold prices soared above $5,500 per ounce, briefly touching $5,591 before settling near $5,554. Just weeks into 2026, gold is already up more than 25% year-to-date, following an incredible 64% rally in 2025. Silver followed closely. Prices jumped to $119 per ounce, marking nearly 60% gains so far this year. This rally is being driven by safe haven demand, aggressive momentum trading, and massive global liquidity flows. Odd dollar weakness fuels the rally. One of the biggest drivers is the sharp fall in the US dollar, which has dropped to a 4-year low. President Donald Trump welcomed the weaker dollar, calling it great for the economy. Analysts say this decline is supercharging gold and silver prices, as weaker dollars make metals cheaper for international buyers. Market strategist Robin Brooks described the dollar's fall as rocket fuel for precious metals. Federal Reserve holds rates steady. The U.S. Federal Reserve kept interest rates unchanged at 3.5% to 3.75% in a 10-2 vote. Fed Chair Jerome Powell stated that inflation credibility remains strong, even as gold and silver surge. However, 2 Fed members dissented, pushing for rate cuts, citing cooling inflation and slowing economic momentum. Markets now believe rate cuts later in 2026 could push metals even higher. Geopolitical tensions add fear. Premium rising U.S.-Iran tensions have intensified investor anxiety. President Trump warned of deploying a U.S. armada, while Iran threatened retaliation. This escalation pushed investors toward traditional safe havens, gold and silver. Major banks are taking notice. Goldman Sachs forecasts gold at $5,400 by year-end. Deutsche Bank sees gold reaching $6,000 in 2026. Market concerns and volatility. Veteran economist Ed Yardeni warned that markets may be broken, driven more by liquidity flows than fundamentals. Retail buying has exploded, especially in Asia, while central banks and large funds continue accumulating gold aggressively. This combination has created extreme volatility, raising concerns of sharp corrections ahead. What's next? Gold and silver's historic rally reflects a weakening U.S. dollar, geopolitical uncertainty, expectations of future rate cuts, massive institutional and retail demand. The key question now is, are we entering a new era for precious metals or nearing a volatile peak? Stay tuned for more global finance updates. If you found this breakdown helpful,